Hi my loves, welcome back to the Riggy Report. My name is Riggy and today we're going to talk about a crisis in the mortgage industry that I don't really see anybody talking about on YouTube. So we are going to do a deep dive on what is really going on right now, okay? So if you have been following the real estate markets for the past year and a half, you know that everybody and their mama, their daddy, their cousin, their grandma, their dog was either buying, selling, flipping, or underwriting real estate loans. As of right now, most of the real estate lending business is conducted by independent lenders. It's controlled by independent lenders. So these are not your big banks. These are your smaller mom and pop shops, or they're not really mom and pop, but they're your smaller, less traditional lenders, right? So last year, 2/3 of the top 20 lenders in the United States were non-bank lenders, actually. So since 2016, banks have seen their share of the market, of the real estate lending market here in America, shrink because the independent lenders, they're not FDIC certified. They don't really have as much restrictions and as much regulations as commercial banks, because commercial banks have commercial deposits. So they have your money, my money, your mom's money, your mom's probable IRA sitting in their account. So they have to be a lot more careful with how they use their funds. Whereas independent lenders, instead of using money from deposits to make loans, they're using funds that they borrow from other lenders to make loans. So they borrow the funds at a lower interest rate and then they lend it out to you at a higher interest rate, and they make the little spread in the middle. So that little 2-3% in the middle is how they make their money. But also they sell the loans that they make to other people. That's another way that they make money, right? What's been happening is that earlier this year, if you remember, interest rates went from like 2%, where there was a lot of people doing activity, a lot of people buying, a lot of people selling. Like the real estate market was so hot. Like real estate, everybody was trying to buy a house. I was trying to buy a house. Hell, I didn't get one, but I was trying. You know, a lot of people were buying and the real estate market was really hot. So the lenders were making a lot of money. However, the Federal Reserve raised the rate. So interest rate went from about 2% to about 5% now, and it made you know, buying really expensive. So a lot of first-time home buyers are kind of priced out, and buyers are not as happy. So what's happened is real estate prices have been falling because nobody is really able to buy, because one, the houses are too expensive, and two, the interest is too high. So the real estate market has been cooling down. However, the rising interest rates also had another consequence for the lenders. They have been underwriting a lot of loans at 2-3% interest rates, but now that the interest rates have risen to 5%, the value of the loans that they did in like January have plummeted. They've dropped like 20, 25, 30% because nobody wants to buy them. Why would I buy a loan that you made in January to get 2% back on my money when I can buy one that you made last week to get 5%? The problem is you can't really find any loans because nobody is trying to buy houses right now because everything is so expensive. So because of that, a lot of companies have been laying off people because they don't have the volume. They're not making as much money from the transactions to be able to support the staff that they hired when the real estate market was booming. And it's not just independent lenders. A lot of banks have been firing people too. JP Morgan just fired a good amount of their lenders and their mortgage underwriters, and it's really signaling like a crisis in the market. But a lot of people, not just people, but the media is really playing it down. Like they're trying to play it safe. They don't want people to know what's really going on because they're telling you, hey, we're not in a recession, but like banks are firing like half of their staff. Like these underwriters, the mortgage underwriters, a lot of them are going into bankruptcy. There's already been a class action lawsuits filed against like lenders because one, they were producing bad loans, and two, their loans are not producing anymore. So it's really crazy to see all of this is happening, and it's crazy to see like what else is going to happen in the future, because as it stands right now, real estate prices are just going to continue to drop because it's too expensive. Let's be real. Like if you try to go buy a house right now, it's too expensive. Houses have gone up like 100-200%. Who can afford it? Not with our wage staying the same way. So I just think that it's really interesting, and this is definitely something that we should keep an eye on. I'm definitely, you know, watching the mortgage industry because this is really interesting to me. Let me know what you guys think down below. Don't forget to like, comment, and subscribe so we can keep following this together, so we can keep talking about it, you know. And that's all for tonight. Have a good one.